Truworths has warned of tough trading conditions here and the UK in the next 6 months, but said it plans to expand trading space by approximately 2% in 2017 and by about 4 to 5% in 2018. Truworths CEO Michael Mark joins us now on Skype to provide some more insight on this. Evening to you, Michael. Let's start with your comment, which we see often with the retailers now, challenging conditions, yet you are still expanding against a background of rather flat revenue and headline earnings down a bit.
Yeah, David, it's been a tough period, but you know, a retailer has to look long term. We all have long-term leases, we have brands, long-term strategies. So you have to see past the economic cycle, even though it is a particularly tough one at the moment with many, many headwinds. The truth is it's still a cycle. And so you have to plan long-term and you have to carry on with your strategy. We're happy with ours. We are reacting to circumstances and environmental changes. But nevertheless, in principle, we are very happy with our positioning and with our long-term strategy.
Michael, Nelson here. I just want to establish, I mean, we know that the economic environment is quite challenging and that's always difficult for retailers. But in the South African context, I mean, we've seen significant competition come in with the arrival of a lot of international brands, and you know who I'm talking about, the likes of Zara and company. To what extent have these brands affected your own sales growth?
You know, Nissan, that's a good question, but it's a very difficult one to answer. If I answer it specifically relating to how we do in malls, for example, where H&M or Zara enter, it doesn't seem to make a major dent in our numbers. In fact, there have been some stores where they've opened up which have improved their sales as a result of greater foot count in that mall. But of course, what I can't tell is how much nearby malls may or may not suffer, and that includes us with all the other retailers in those malls. Because in the end, the pie is not growing so significantly. As you know, the economy is slow. So they do impact everybody because they're new entrants in a stagnant market. But I, in some ways, think the impact of the international retailers is exaggerated.
Okay. The next question I have is more related to some of the things that were mentioned in the results. You know, we understand that these new credit criteria that have been put forward by the NCR is providing a very difficult environment, especially on the credit side, to approve credit and to help with credit sales. And I think 3 of the JSE-listed retailers are now taking this to court. Maybe you could just explain to us exactly what about these new regulations you think you know, particularly unfair in the way that it's currently set up.
Look, Nissan, I can't comment too much on that because, as you rightly say, we, together with 2 other listed retailers, are going through a legal process at the moment. But what I can say is none of us are in any way have any problems with the concept of regulation for credit. In fact, we completely and wholeheartedly endorse it. Responsible credit is critical, and there has been problems in that regard over the years, and I suspect not much with the credit retailers, but elsewhere in the marketplace. So that has to be dealt with, and credit regulations are essential. Our issue is not with the regulations, the majority of the regulations. One of the key ones that bothers us is that regulation that requires customers to bring in 3 payslips or 3 bank statements before they can obtain extra credit or open an account with us. And given the reality that we have access to the most sophisticated scorecards in the world available in South Africa, they don't, in our opinion, add benefit to the ability to assess risk. But what they do is discourage, because of inconvenience, opening of accounts. And that is our objection.
Michael, I have to say I agree with you totally there. You can't buy a pair of sunglasses these days without presenting 3 electricity accounts and As you say, with all the technology available and the data available, it's hard to see why they insist on this. You yourself, a veteran CEO, then you moved out of the position, and I think I asked you this last time when we talked about the results. You came back into the chief executive position to become a veteran CEO again. What are the plans? Are you happy to just carry on indefinitely? Are you making plans to get out again and for someone to succeed you?
David, it's not quite the way you said it. It's almost, but you're right. I've been 26 years on this in running Truworths as CEO. It's a long time. I'm 64 years old, so I'm also getting on in years. We did recruit an external European retailer to take over time. He was appointed as CEO designate, not CEO. And over the 6 to 9 month period that he was with us, he never took over the reins. And I continued as CEO. And it turned out that it didn't work out between us. And we parted company. Our board, he and I, concluded that the relationship was not going to be conducive for great results in the future for Truworths. So I then committed to a 6 month rotating, well, you could say 6 month notice, either way contract. And I'm loving what I'm doing, and I'm right in the saddle as I always have been. And we are we will appoint an internal candidate in all likelihood within the next 12 to 18 months, I suspect, possibly a COO, to begin the process of taking over from me.
Well, that answers the question. Apologise for getting the fact wrong there, but in principle you were intending to replace yourself and changed your mind and, as you say, are on for the medium term at any rate. That is Truworths CEO Michael Mark.